right, everyone, let's move on to our next session. Our next session is titled DeFi Ecosystem Perspectives on Scalability, Privacy, and Growth. And let's go on to the stage, our panelists and moderator. Guest panelists are Andrea Baglioni, Solana Foundation, Charles Liu from Espresso Systems, Jason from HyperX, Sarah from BNB Chain. And the moderator is Maurice, Jaspi, and Andrew from Hello Loves. Please come up to the stage.
Okay, hello. Welcome. My name is Maurice Andrew. I'm the head of Web3 over at Hello Labs and Killer Whales. Today we're here at WebX Tokyo 2025. We have some amazing legends here from the DeFi space, all the way from the BNB chain down to Solana Ventures, Solana Foundation. So really looking forward to diving into this panel, ask some amazing questions and hearing from these legends in space. We'll go from right to left. If you guys want to introduce yourselves to the people of WebX and let them know what you do, how you got started in crypto as well, and we'll just go one by one.
Sure, hi. So my name's Andrea. I work at the Solana Foundation, and I've been doing that for about 4.5 years. I run what we call our capital team. So that means I basically run our grants program, I do some finance, basically think about how the foundation can spend its money to grow the Solana ecosystem. How I got into crypto? Well, I started my career out at a Silicon Valley company called Square, and I started there with someone who was very deep into this subject, and we would have lunch every day, and I would talk about sports, he would talk about crypto. His conversations were more interesting. And then eventually he joined Solana and brought me with him. So yeah, that's it.
Hey everyone, my name is Charles. I'm one of the co-founders of Espresso Systems. What is Espresso? Espresso, we are building a base layer for rollups. You can also think of it as a confirmation layer, and I'll tell you why we think it's so important later. And how I got into crypto, well, I've been working on Espresso for over 4 years now. We've been putting a lot of work into it. Our mainnet has already launched late last year. It's a permission mainnet. They're run by around 20 node operators, including Kudasai here in Japan. And we're actually looking forward to upgrading our mainnet to proof of stake in a few months. So very exciting. And how I got into crypto, well, I've been an enthusiast for quite a while. I started the Bitcoin club at my university back when I was in college and made a lot of open source contributions back in the day, and here I am.
Hello everyone, I'm Jason. Thanks for having me. So I'm from HyperX, representing HyperX. So I'm head of business development at HyperX. So what is HyperX actually is a fully decentralized on-chain perpetual trading platform which deliver the performance of a CEX, but with the transparency and fairness of DeFi. So actually how I got into DeFi is just started back in 2019. So I was just researching about yield farming, stacking, and trading just like everyone else. But the more I dug in, the more I realized it's just not about price action. So it is about giving back powers to users like the real ownership, programmable finance, and etc. So that's when I know I want to be part of building this future. So yeah, so currently I'm working across with community across Korea, Japan also, Malaysia, Vietnam, and Thailand. So helping traders and builders to assess the new generation of on-chain infrastructure. Yeah, thank you.
Hey guys, this is Sarah from BNB Chain. I'm the head of BD of BNB Chain. So what is BNB Chain? We are in layer 1 blockchain infrastructures. There is 3 important tech stack. One is BNB Smart Chain, which is an EVM compatible layer 1 protocols that is doing quite well recently. We have another OPBME, which is a roll-up layer 2 solutions building on top of BNB Smart Chain. And there is Greenfield, which is the decentralized storage protocols. So my role is BD head, so we just talk about different projects and get partnerships or developers to build their product or solutions or infras in top of BNB chain ecosystem. I also manage the incubations and even direct investment for BNB chain projects. So how I joined crypto industry, so back to 2018, I really been inspired by the concept of Bitcoin, which is peer-to-peer digital monies. And then at that time, I heard about, Bitcoin's public chains, and then I joined a layer 1 protocols in Asia. That is quite popular at that time. It's also top 20 cryptocurrencies other times. And so from that time, I just keep working with layer 1 or layer 2 protocols and building different DeFi or whatever dApps in a different ecosystem. So that's me, and that's basic information about BNB chain.
Amazing, amazing. So as you guys can see, we have some amazing legends in the space. We're going to be covering the DeFi topic. And the first question I want to ask is, what do you think the most challenging aspect of DeFi is right now, 2025 in crypto? We'll go with Charles first.
Sure, yeah, very happy to. So I think when we look at both DeFi and CeFi, there are, myself as a crypto enthusiast and a user, I think there are reasons why I use each. So for DeFi, what we want is trust minimization. So what I mean by that is things like self-custody, being able to have your assets without needing to trust any centralized third party. Whereas on the CeFi side, what is most important is performance. Getting the same Web 2 experience, but in Web 3. Now what we are seeing is solutions like rollups. Rollups are sort of trying to bridge the two between DeFi and CeFi, so you can have the DeFi experience and the DeFi guarantees while also having the CeFi performance. And I think one of the biggest challenges for DeFi, as you asked Maurice, is how can we get the CeFi performance while still getting the guarantees of DeFi? Rollups try to do that. For everyone who doesn't know, rollups are a scaling solution that basically batches a lot of transactions together and then settles at frequent periods on a layer 1 like Ethereum. They are trying to scale to get the CeFi experience to move extremely, extremely fast and process millions of transactions per second, perhaps, but while also having the security guarantees of CeFi, of DeFi. Now, what Espresso is trying to do is we're trying to do a base layer for rollups. We're trying to actually improve those security guarantees for rollups, because rollups are actually, while they are relatively secure in that generally rollups cannot steal your funds, there are still many problems. For instance, if a rollup whose sequencer is hacked, that could lead to transactions for, say, the last hour being completely reverted and changed, and that is completely unacceptable for, critical use cases like trading. So that's what I think is, getting the DeFi guarantees while still having the CeFi performance, I think is the main issue that Espresso is trying to solve, and I think is the main issue that DeFi is facing right now.
I want to definitely come back to that, especially what Espresso is building. Andreas, and then Jason.
Yeah, I'll say that in the Solana ecosystem, at least, I'd say the biggest challenge goes beyond tech at this point. It's sort of an interesting intersection in time where you sort of had the meme coin craze, lots of retail adoption, and now you're seeing institutions enter the game and really sort of think about how they can leverage RWAs, stablecoins, and DeFi itself as part of their business, right? So you have Web 2 institutions thinking about how you can do Web 3. Combine that also with sort of regulatory scrutiny you're getting, especially in like the US, and it's this interesting time where expectations are very high, but actually DeFi is still quite new by the broad scheme of things. And so it's sort of managing that complex intersection of all those layers that, at least right now for us, is what we think about the most. It's how do you make everyone happy while also explaining that this is a work in progress.
Jason?
I think the big one is the standardization. So different platforms, they tokenize the assets differently. So just like real estate, bonds, invoices, but I think there's no common format yet. So also oracles and data feeds are a challenge. How do we make sure the value of an off-chain asset is correctly reflected on-chain? So I think this is the most challenging in the RWA tokenization. Yeah.
And Sarah, what do you think? What do you think the most challenging aspect of DeFi is in crypto today?
I think right now it's still liquidity fragmentations. So actually, every chain have large portions of TVL right now, and we are competing with each other in terms of the asset that we can get them to launch on each chain. And even Ethereum, within Ethereum ecosystem, there's different layer 2s as well, right? So assets stay in layer 1 and also in layer 2, and in different layers, they have different bridges. It can be decentralized solutions, and also there is centralized solution as well to bridge the liquidity among different chains. But still, the solutions of the bridge is not quite secure at this time, and also it's not really efficient. So I think liquidity fragmentation is one of the most biggest issues for DeFi for now. And also another one is, imagine in the future you really can tokenize everything on chain. It's not just native crypto assets, but also a lot of real world assets. So there's gonna be a lot of people that is really holding their assets on chain and also trade their assets on chain in the real time. So it's not, in the working time, it's 7 plus 24, right? And then that will really demand for a high performance chain. So for now, I don't think there is any existing chain that can potentially, really make sure that they can handle those requests or the frequencies of those types of asset tradings on chain. So we still keep improving the performance of the chain to make sure there is high TPS, no gas fee, and no block time, to make sure that we are getting prepared for the futures, that there is a timing that we're really tokenizing everything on chain and trading them on chain.
Thank you for a detailed answer. I want to go back to Charles. I want you to break down a little bit more about what Espresso is doing with the challenge that you said you were facing, and how those solutions are helping today.
Yeah, sure thing. Let me maybe start by, from the beginning, and I also want to touch on Sarah's response, because I also agree that liquidity fragmentation is one of the fundamental problems with the entire space right now, and it's one of the problems that Espresso is poised to solve. So the reality of the situation today is that there are basically thousands of chains being created. Many of those are rollups, and everyone has an incentive to create their own chain, right? So Robinhood is launching their own chain. Many entities in Japan are. I understand that Sony and many other traditional finance leaders are creating their own chains. Every day there's practically a chain. We work with many of the roll-up as a service providers like Caldera and Altlayer, and they are launching many chains every month. There are many reasons for this. People want to have control over the transactions or the execution rules of their chain. They want to keep the sequencer revenue. That is the reality of the situation. And as Sarah said, there's huge liquidity fragmentation problems. Liquidity is fragmented between chains. RWAs, assets, tokens are being issued on different chains. And also, as I mentioned earlier, there's a security problem, because maybe you trust a large chain.
Hello, and Konnichiwa Tokyo, and WebEx.
Maybe you trust.
Firstly,
They didn't like your answer.
Anyways, as I was saying, maybe you trust a large chain like Arbitrum 1, but you're not necessarily going to trust the 10,000th chain that's being run, because, as I said, all these rollups, they're being run by a single server somewhere. So what is Espresso? As I said, Espresso is a base layer for rollups, and the fundamental thing we do not do any execution. That's what that's why Espresso is able to be so fast. But what is the fundamental thing we do? Espresso gives a very fast, guaranteed confirmation that a transaction is final. For any chain or a rollup that uses Espresso, basically, Espresso can guarantee that within seconds, a transaction on a rollup will never be reverted, and it's guaranteed to be final. That is extremely important for important use cases like trading. An institution definitely does not want their transaction to be reverted after 15 minutes after they've already done an arbitrage, for instance. And it actually, this confirmation, the confirmation, when I say confirmation, this guarantee that a transaction is final is actually fundamental to composability and solving the liquidity fragmentation problem that Sarah mentioned. So that is what Espresso is doing to sort of solve this issue.
Amazing. Again, thank you. Thank you for a detailed answer. I'm definitely going to be tapping into Espresso and what you guys are doing. I think it's amazing how you guys are tackling these challenges. I want to go to Andrea. So with Solana Foundation, you're head of capital, and I understand that Solana has a massive DeFi scope. I want to understand, how do you guys go through due diligence process to know what projects to work with on Solana when it comes to DeFi?
Yeah, for sure. So maybe for some context, in our grants program, it varies month by month, but on average, we get 300 to 400 applications a month, sometimes up to 600. These applications cover all verticals, but obviously DeFi is sort of a huge part of that. The thing so agreed with everything that's been said so far. The way we think about sort of funding DeFi and really all applications on Solana is we look for ones that are making sort of an existential bet on the need for really cheap, really fast. And we feel that those projects that sort of need that and choose Solana for that technology tend to do better down the line. And we definitely see projects that maybe start there and then go cross-chain, and that's totally fine for us. Our goal is to sort of build the best technological solution and then let the rest take care of itself. All our funding is milestone-based, and if there are projects that are multi-chain, then that's fine. Just all our funding is focused on what happens on Solana. So yeah.
So diving a bit more into the process of working with these projects and finding out which ones are better and which ones aren't. You mentioned that you have a ton of deal flow that's coming in, 300, 400, sometimes going up to 600. When you work with these projects, what's some of the processes you take them through once they're partnered with Solana Foundation?
Yeah, so actually, our goal is to really get as little involved as possible. Like in our ideal state of the world, the Solana Foundation doesn't actually exist. Right? The ecosystem runs itself. It doesn't need an entity that is there to fund things, to like help things grow. And so what we do is, primarily, we provide this grant-based funding. We'll sometimes think about investments, but we also try to connect projects to each other within the ecosystem, right? We try to help these projects help themselves. So we do that. Sometimes we'll help with marketing and hiring, but for the most part, we sort of like vet the projects we fund to begin with to make sure that they're not going to require ongoing support by the foundation. Yeah.
Okay, so I like that answer. We have a similar take when we work with Hello Labs. We have an incubator, and we have quite a similar approach. We are a bit more involved because with the incubator, we do media marketing and so on and so forth. However, we try not to take too much of a hands-on approach because it's still, one, their company, and two, they have to put their part in. So I agree with you on that part as well. I want to go into a little bit deeper into the DeFi side, but more with traditional companies. I heard mentioned before there are going to be traditional companies that are going to be building out their own blockchain, like Robinhood and so on and so forth. So my question to you guys on the panel is, do you think traditional companies like Sony, Robinhood, and so on and so forth, do you think it's a good idea for them to make their own blockchain? Personally, I am on the fence. I'm on the fence because I believe that this is going to create a massive saturation in the crypto market if they come in. Because one, they got tons of money in the bank, and they have enough money that they can bulldoze a ton of big boy companies in crypto. So I want to hear from you guys. Are you on the fence? Do you agree it's a good idea, or are you completely against it? Let's go, Jason, first.
About this one, because I don't have much idea about, for this, but for this question, I'm totally agree with it. And with the point that just now you said they can bring a lot of resources to come in. At least it's good for the industry or the RWA. This is what I think. Yeah.
Cool. Let's go Sarah next.
I would say it's not really easy to build a public chain because I've been building this one for over 6 to 7 years. So it's not like, okay, I want to do it, and I will do it in the next day, right? So I would say they can try, but I would say maybe 90% of them will fail in the end. Because building a public chain is not just you have the monies, you tokenize your assets on chain. It's more about building an ecosystem. You need get builders, the third-party builders, not just the builders in your companies, but also the builders in the communities all over the world. You need get different infras to support you. It's not just building a DEX on your chain, but also you have cross-chain bridge, you have a data index and oracles. It's a lot of things. That will cost money, cost your time, and so a lot of efforts and even learnings. You need to learn a lot about really building the public chains. There is also potential security issues. So it's always easier to choose an existing chain that's been operated for a long time, and they have already proven themselves to be able to operate and run a chain success in a long term. And also the existing chain, they have already built up the infras and also the liquidity there, the infras and DeFi stacks there. So for new big companies, especially they are just doing the Web 2, even though they have a lot of money and assets that you mentioned, it can still be really difficult for them to build a successful Layer 1 protocols.
Let's go Charles, but before you say anything, you heard it here first. Sarah believes that 90% of them will fail. This was here said, quoted WebEx 2025. Charles, let's go with you.
So I think Sarah made a very good point. I think it's extremely difficult to make a public chain where you need to find validators, you need to properly incentivize the validators, and you need to build all the infrastructure around it, like explorers and oracles, as Sarah mentioned. But I think that is also a reason why the vast majority of new chains and new companies right now are choosing to make roll-ups. We believe at Espresso that any web application can be made into a roll-up extremely easily. And in fact, with the roll-up as a service providers like Caldera today, you can basically start a roll-up with just a single press of a button. So I think it's actually extremely easy to build a chain. Now, whether the chain is used and successful is another matter. But as I mentioned before, I don't agree or disagree that it's a good idea for companies to make new chains, but it is the reality because it is in any entity's interest and it's their incentive to build a chain so that they can control what happens on the chain and so that they can get the revenue from the sequencing fees. So yeah, definitely there are problems with that, right? Like liquidity fragmentation, like saturation, like having to deal with interop and bridging between those chains. And that's really why we're working so hard on Espresso to deal with this reality and try to improve the experience.
Andreas, what about you? What do you think?
Yeah, I think I side more on Sarah's side of the answer, which is it's very hard. Like these businesses have a core focus already. They're very good at what they do. Building blockchains and managing blockchains, growing communities is usually not part of their core sort of strengths. So yeah, I mean, Espresso aside, I do think, and I totally get the incentives for why someone would want to do it, but we've seen even, I mean, a little different, granted, but even things like Helium, right, originally had their own chain, decided to migrate to Solana because sort of keeping it up and dealing with all the stuff that is not part of your core focus is hard. And so I don't know about 90%, but I would side with probably a good idea in theory, not a great idea in practice for most teams.
Just to respond to that, I think we actually are on the same page. I think we agree. I do not think it is a good idea for everyone to build a general purpose chain, like a general purpose EVM or an SVM chain. I think there's absolutely no reason for that. But I think I have seen very good reasons why companies would want to build their own chains. Right? Robinhood is building their own Arbitrum rollup just for trading of assets on Robinhood. And there are good reasons for that, because they need to be able to control the sequencer to control ordering. They need to be sure that all the addresses and accounts on that chain are basically mapped to verified Robinhood users. So there are good reasons to build app chains, but I completely agree that it doesn't make sense for everyone to build a general purpose chain.
I do side with everyone building a chain. There's no reason for it. And I actually do agree with Sarah's statement of, I would say around 90%, maybe if not more, would fail. And I think one of the core things that they're going to fail at is a lot of these traditional companies, they do not like giving creative control over. And not just creative control to the creative team, the marketing, community, consumer, the developers themselves. They're not going to want to give that creative control over to them immediately. They're going to take too long. And by the time that too long time has passed, someone else came up with the idea, built it out, and who did it? Someone from the crypto space. So I think that's going to be a big downfall for traditional companies. I want to also touch on, I did mention these companies building their own things. The reason I'm on the fence is I do see it does help with bridging people over. We've seen Visa and MetaMask. They have their own bank card now. Gemini is going to be rolling out a credit card, and that's going to be for Bitcoin. When you spend, it's going to have points, but instead of the points, you accrue Bitcoin. Coinbase and American Express are partnering up as well. So we're seeing these things roll out. Now, to bring it a little bit more back to DeFi, we've seen the traditional side coming over, building, and whatever, but a big part of the DeFi space is meme coins. Now, asking professionals of the space from Solana down to BNB chain, a lot of meme coins are coming into the space. They're built every single day. We see them on launch pads. I definitely want to hear from HyperX and Espresso on what you guys think about this. Do you believe if meme coins continue to go how they're going, do you think this is going to be destructive to DeFi? Or do you think it's going to continue onboarding traditional users into Web3? Let's hear from Andrea from Solana, because you guys hold quite a large pool of meme coins.
Yeah, just to clarify that statement, the foundation does not hold a large pool of meme coins, and generally we do not interact with meme coins ourselves. Now, that aside, on Solana, we saw a huge surge of meme coin activity in January, roughly around the time that the Trump coin launched, and sort of has, activity for meme coin specific stuff has actually declined a little bit over time. And so I think actually that trend is sort of maybe different than the general perception of how things are going. I'd say it's a complicated world, because yes, I do see the appeal of there are people who would have never traded crypto, never gotten involved, never learned about it, having an avenue to join. The flip side is that it creates this, and you probably understand this better than most, Maurice, it sort of creates this sort of image of maybe a not serious space. So that's something that we're navigating generally in Solana, is that we have institutions who are interested, but they know of Solana because of the meme coins, right? And sort of overlook the technological advantages that might otherwise mean this could be a great solution for them. So is it destructive in the long term? Probably not. I'd probably side on overall it is a net positive. But yeah, who knows? I'd side net positive, but slightly.
Slightly on net positive. That's no worries. Let's go Charles, and then we'll go to Sarah afterwards.
Yeah, I own some meme coins. I'm not a huge trader, but I think I'm not sure if I'm a net positive or net negative when it comes to meme coins, but I think it's just the reality. Just as there is an incentive for companies to build their own chains, I think there's an incentive for developers to launch their own meme coins for the profit. And I think, as Andres, you said, the meme coin activity is dying off. I think that's just a natural market reaction, because the vast majority of meme coins are going to zero, and a lot are getting rugged by the developers. So I think longer term, it's probably, as you said, a net positive because the market is self-correcting. You know, if the market gets too saturated with a ton of coins, people are going to get smart to it and they're just not going to buy them. So yeah, overall, I would say it's just a reality. And if regulators or the industry do not step in to prevent scams, then I think the market corrects eventually anyways.
I will say one quick thing. It was sort of wild. At peak, there were like literally tens of thousands of meme coins created like a week. It's wild. Like there are people all over the world doing this. It's like people talk about crypto market fit, and like for a while we saw what it could look like.
I agree with Charles. Like it's a reality, right? So it exists. So it should have some reason there. So there's always people that they prefer trade meme coins and launch meme coins instead of building projects and VC get investment from VC and then starting from there and launch utility tokens on chain. So it exists. So there is a reason. So for public chain, because we are permissionless, you can do what you want. You can trade whatever the assets you want on chain. So we do it for every user, just not for one single group of people. So you can hit meme coins, but the other people, they want meme coins. They will not see, okay, you cannot come to our public chain because it's permissionless. That's the first point. The second one is what we are trying to do is we're trying to give our on-chain users more choices by onboarding more types of assets on-chain. So I think for some period of time in the past, users don't want to trade VC coins because they think VC just dump on them, on the retailers. So they just, okay, meme coins give me a fair or a fair right compared with all other buyers or traders. So I start at the same point with them together. That's why they trade meme coins instead of VC coins, so-called VC coins. But what we do is we onboard more type of assets, whatever it's a real world, a T-bill, or whatever, or tokenized stock, or tokenized private equity. We just give them more choices. And then once there is more choices, they can do whatever they want or they prefer to trade it on chain. So maybe that's my answer to your question, yeah.
And Jason, how about you? What do you think? Do you think it's more destructive to the DeFi space to have meme coins, or do you think it's going to get better as time goes on?
So our answer is, so is it destructive? So I think yes, but at a micro level, just like everyone else says, because the retail losers and scams. But yeah, I think that's my answer because I don't. Very short answer for that question, yeah.
No worries, all good.
Because I lose some money on meme coins too, yeah, that's why I feel it, yeah.
Okay, I understand that. Andreas?
The other slight positive, at least for us, was that due to the meme coin activity, it was a great stress test for the network. Like, it was just handling so much volume during that short period of time. It was actually super helpful in making sure that, like we were talking about earlier, when institutions want to trade at sort of NASDAQ speed, that is a reality that a chain can support. So a little bit different than the cultural answer, but from a tech perspective, net positive.
You know what, I never thought about that. Yeah, that must have been insane to just wake up one week and just see this ton of volume come in. Yeah, I know that devs are probably working overtime. I do want to touch on something that Sarah did say as well, where she said, you know, people don't really want to trade VC coins because, you know, the VCs sell them. And I come from the VC world prior to Hello Labs, and I'll tell you one thing as well. That phrase where people say, oh, people don't want to trade tokens because VCs sell them. The back end of the DeFi world is a lot of VCs are not VCs, they're not venture capital funds. A lot of VCs are actually syndicates. They moonlight as a VC, but they're really a syndicate. The difference is a VC has LPs, liquidity providers, or limited partners. Those guys fund the VC. The people that you see that say, hey, we're a VC, they go to you, see what your project is, say, yeah, we'll fund you. They go back to the limited partners, show them the project, and the limited partners agree to say, yes, we'll invest, or yes, we will not. A syndicate is very different. A syndicate is basically like a big Telegram group chat with a ton of people that have invested about £100 to £1,000 because they don't have 100K of themselves. They invest that into a pool that's known as a VC, which is actually a syndicate, and your project is voted between 100 to 1,000 different random people in a group chat or in like a forum. Then they invest. The reason those guys sell immediately is because they need to get the money back to 1,000 of their own investors. That's why a ton of VCs today in crypto sell, especially on DeFi projects, and they sell immediately as they get their tokens. The actual VCs, most times they don't sell because they're a VC. They don't need to. They don't need that money back. They have actual millions. So, side note, if someone says they're a VC, ask them what their AUM is. A syndicate does not have an AUM. Doesn't exist. A VC does. If their eye twitches and they tell you a random number, they're lying to you and they're a syndicate. That's just for any founders in here that do come across them. So we got a little bit of time left on the clock, and I want to go a little bit more into what these guys are building. So I want to ask a question. Is there anything you want to let the audience know today that's coming out that you guys are working on that you want to make them aware of? So that's from what you might be doing personally or what you'll be doing with your company you're working with. Andreas, and then we'll go down right to left.
Yeah, I mean, we're a foundation, so we don't technically build anything. But on Solana, I'd say there's primarily two large things to look forward to. One is a lot of technological improvements. So there's something called Fire Dancer and Alpenglow that should dramatically increase the sort of speed, efficiency of the network. And then the other side of things is sort of this movement of institutions that we're seeing across all chains, really. But institutions starting to think about how they can use in some cases, public blockchains in order to sort of improve their businesses. So just very excited about the space. I do think DeFi, like at some point, basically everything becomes DeFi. And so for us, the way we think about it is let's build the fastest and cheapest and scalable chain we can and then see what happens. So excited about what's to come.
For Espresso, in the next few months, I would say there are two primary milestones for us. So the first one I hinted at earlier. We are currently running along with 20 institutional and community node operators, a permission mainnet that's been running very smoothly for about a year. It already supports chains like Rari Chain, Rareables Chain, Ape Chain, the Bored Apes Chain, I guess. And with many exciting integrations to come, and that is finally going to be upgraded to proof of stake in a few months. The proof of stake upgrade has already been running very smoothly on our long-running public testnet decaf for 3-4 months now, and we're excited that it's finally going to be fully decentralized. And also many more chains are starting to use Espresso. Celo is currently working on an integration. Many chains in the Cartesi stack, and we're also working with some exchanges to take advantage of the fast Espresso confirmations by speeding up exchange deposits. In some cases, from hours to just a few seconds. So we're working with a couple major exchanges on that. So those are the main upcoming releases that I can share.
Amazing. Jason, and then Sarah.
All right. HyperX is just we're building a fully decentralized on-chain perpetual trading platform. We started back in December of 2024. So it's currently already live on 15 chains, but I don't think that I already live on Solana and BSC yet. So maybe after this, we can have a talk or what? Yeah. All right, Andrea. All right. Yeah, that's it. Thank you.
Few things about BNB chain in the next half of the year. One is stablecoin. We'll keep pushing the stablecoin, whatever, onboarding more new stablecoin in different currencies. And also, we keep pushing activities regarding stablecoin, including the daily active user right now is top 1, and also transactions of stablecoins. We are doing the gases campaigns for stablecoin transfer on BNB chain, by the way. So you don't need to pay any gas on BNB chain to transfer your stablecoins. That's one thing, and other ways, definitely, because we were going to onboard more type of value assets on BNB chain, whether it's a tokenomic stock or T-bill, money market fund, or other type of value assets. So there's going to be more types of assets. As I mentioned, right, we wanted to give the rater more choices on chain. That's the second point. And AI is definitely another thing, especially AI agent plus payment on chain. That's something we kind of getting really, really interesting, and we are trying to push and support a lot of developers or projects that's doing something relevant. And the final important thing is we are trying to launch a new high-performance chain next year in 2026. which will, as mentioned, have high TPS, no gas fee, and no block time, which potentially can support more transactions on chains and more assets on chain.
Wow, okay, amazing, amazing. Well, you heard it here first in WebEx 2025. You heard from legends from the Solana Foundation, Espresso, HyperX, and the BNB chain. My name is Maurice Andrew. I was your moderator for today's panel, work at Hello Labs and Killer Whales. Thank you today for coming to our talk. Have an amazing rest of your day, and we'll see you guys later.
Thank you very much for your wonderful discussion, everyone. Let's have a commemorative photo session with all of you on stage. Please take a look at the camera in front of you. Thank you. So that's it for a photo session. Thank you very much for your cooperation. Thank you very much, everyone. Round of applause. That was a very fruitful discussion. Thank you, everyone. All right.